Hello everyone, welcome back to Fundrise Finance. The month of May has been good for the markets with the S&P 500, which we're looking here is the S&P 500 ETF, SPLG. We can see the month of May, it is up 5.4%. So after the scare that we saw in the month of April, where there was a pullback of close to 5%, the market seemed to be back on track, going against the conventional wisdom of sell in May and go away. So the information you're seeing here is on Seeking Alpha, which is hands down one of my favorite platforms to get information about stocks, ETFs, everything. You can see analysis, news, and everything. If you enroll to Seeking Alpha through the affiliate link I have in the description notes, you can currently get 20% off of premium membership. And that's one way you can help my content here on YouTube. Hope you'll use it and help this young channel. No matter what the markets do, be it up or down or flat for a long while, we continue to be consistently invest into the market, do good quality stocks and ETFs. And that's what keeps our portfolio running for the long term. And that's what I will be showing in this video today to discuss how much my portfolio made as dividend income for the month of May. So without any further delay, let's get started. So this is my overall portfolio in Fidelity with a current value of over $115,000. In the last 1 month, my portfolio is up 3.7% against the S&P 500's performance of close to 5%. But we all know the S&P 500 is very top heavy with the Magnificent Seven or the Fab Five, whatever you call, taking up all the performance. So I'm happy that my diversified portfolio is hanging there, doing its own sweet job of churning out good dividends month over month. That's what we see here. The portfolio activity for the month of May in dividends. I filtered the data from May 1st till the 31st, and we can see a bunch of payments all through the month. Some big, some small, some tiny. Everything add up in the long run, keeping our portfolio ticking. Now I've downloaded all these transactions into an Excel sheet. Here we can see the first payment of $3.51 from the DEVO ETF that pays us monthly. Then almost $31 from Metal Properties Trust. This is my small holding of 100 shares that I just used to play options with. Then we have Verizon paying us $7.44. Then Toronto Dominion Bank, $6.29. Then almost $20 from the JP ETF. Likewise, almost $21 from JEPQ. Now both of these are the monthly payers. Now Lowe's paying us $5.53. Then MasterCard $1.32. General Dynamics $1.31. Air Products and Chemicals $5.66. And we have two tiny payments from my new positions in the portfolio as Flow and VFlow paying us 2 cents and 3 cents. Then Abbott Labs $1.86, AbbVie $3.16, Walmart Foods $1.24, Kinder Morgan $8.17, Morgan Stanley $5.21, Northwest Bank shares $4.09, Procter & Gamble $2.66, Realty Income, the monthly payer at $4.41, Aerosmith $1.22, Apple $2.26, Accenture $4.07, Caterpillar $1.31, Texas Instruments almost $4, Citigroup $4.57, Charles Schwab 76 cents, then Walmart $1.26, SiriusXM $2.69. Now this other small holding of 100 shares where I play options with. Then Conagra Brands $35.40, Paychex $1.47, UPS $5.04. Then other new holding in my portfolio, that's TGRW, paying us together 6 cents. Then Arbor Realty Trust paying us $35. The money market fund, SPAXX, paying us $58.13. Now this is where I hold the cash in my portfolio. And then last, we have Starbucks paying us $6.27. So this is my Google Sheet tracker for the Fidelity portfolio. Currently generates $3,592 as the annual income at a yield of 3.12%. Now adding up all the dividend payments that we saw earlier, the total comes down to be $297.21, which compared to the February month, that's the second month of last quarter, where it was $220. It's like almost, I'd say 70 to $80 more than that. The majority of it is because of the increase in my cash position. So as in when I deploy that cash positions into appropriate holdings, the dividends should get adjusted accordingly. At a quarterly level, we can see the value is currently $459.37. Annually, we're currently at $1,172. As I usually say, the best chart of all is this dividends by quarter. We can see the nice laddered upward growth. Now, with 1 month left in the quarter, I'm hoping by the end of June, this bar should get higher than the Q1 value. Let's see what we'll see in the next 30 days. More than hopeful to see this value go higher. Now, looking at the expected payments for the month of June, Now, June is my highest paying month of the quarter. That's basically the third month of the quarter. And I have a bunch of payments lined up. Here we can see payment expected from WEC Energy. Then we have Ford, Visa, Johnson& Johnson, Zoetis, Cummins, Amgen, Honeywell, Parker Hannifin, Sherwin-Williams, American Electric Power, Chevron, Emerson, Landell Basel. If I add up all of these, we can see currently the value is close to $109. But I do have a lot of ETF holdings in my portfolio because dividends get declared closer to the middle of the month or third week of the month, and that should really bump up my dividend for the month of June. Now, this is the overall dashboard which I used to maintain where I had my Acorns and M1 Finance portfolios. Like I was showing in the videos in the past, I merged all of them into my Fidelity portfolio. So that's where in the sheet I can see the dividend values going way back to 2018 Q1, where it was a meager 57 cents. For the first, I would say, what 2 years, I was never focusing on the dividend much. But late into my second year, when I started to focus more and more onto them, that's when this dividend growth chart, as you can see, has been growing higher. So I have here like a bunch of charts that help me analyze where my portfolio stands currently. You can see here dividend income by sector, which particular portion of my portfolio contributes most of the dividends. You can see here the ETF is the highest, almost $1,124. Now, other than the ETF, financials is my highest paying sector at $329.34, followed by consumer staples at $304, then real estate at $284. You can see here the portfolio value growing with time. This is my equity style. It's majorly large cap. Spread across the styles, value being the highest at 40%, then blend at 26 and growth at 22 with smaller allocations to other asset styles. You can see here in this chart, the monthly dividend split, like which month pays me the highest. So the first month, that's basically what Jan, April, July and October, contributing 14.4%. Then the second month, February, May, August, and November at 11.6. The third month is the highest. That's your March, June, September, and December. Now, there's a tiny speck which pays me every 6 months, June and December. That's just 0.3%. There are those which pay me every month, like realty income or JP and JEPQ. So now those are almost 17%. So yeah, looking forward to the month of June, which should contribute most of the dividends for the quarter. Now this is my dividend income by assets, which pay me the most, the equities or the common stock at 32.6%, followed by cash that currently contributes 23.3%. Then comes the ETF part of the portfolio that makes up 16.3. Then the income ETFs, the JP, JEPQ, and the DEVO, that's 15%. And finally, we have the real estate REITs that contribute 12.8%. Looking at the sector breakdown, we can see I have like 70-30 expectation of this portfolio right now. ETFs are at 31.1% and followed by cash, which is the second highest at close to 15%. Then information technology at 11%, followed by financials at 7.6, then consumer discretionary at 7.3, and staples at 5.8%, and everything remaining is split across the remaining sectors. I do want to bump up my healthcare part of the portfolio, waiting for the right opportunity to deploy the cash accordingly. Let's see. Pretty happy with the performance of this portfolio, which is not top heavy like the S&P 500. It currently sitting at close to 12% gains, with the Nvidia being the biggest gainer, more than 500% return on this one. Whirlpool has been the worst performer here, down 49%. I don't want to sell out of it and lock in the losses right now. Let's see how the future quarters work out for Whirlpool. Now, looking at the income goals for this portfolio, now we had set $3,000 as the goal for 2024, which we are more than $600 over it right now. But I'll not get fooled by this number. I know my cash position is contributing to a major part of the dividends right now, But once I deploy it into appropriate stocks, that will get adjusted. Now, see, the money market fund currently is giving 5% dividend. If I deploy that cash into a holding which gives me, like, say, 2.5 or 3%, or let's say less than 2%, then this value will come down. And so I'll keep watching this position accordingly. But these are some fun metrics to look at. Even with the current value of this income close to 3,600 bucks, you can see the monthly dividend comes out to just over 299 bucks. Then weekly dividend is just over 69. The daily dividend is at $9.84. Now hourly, that's like the 24-hour thing at 41 cents. But if you do the 8-hour work day, that's $1.73. So this is a fun metric to look at just to see how your portfolio will do if it were to go out and do a common 8-hour work. How much would that generate? So yeah, that's pretty much what I wanted to share in this video. Hope you all liked it. And I'd really appreciate if you could hit that like and subscribe buttons so that YouTube can suggest this video to many more people out there, and that would really help this young channel. Until we meet in the next video, let's try to do as much as possible to be financially healthy and keep taking the small strides towards financial freedom. See ya. Bye.